years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. And tonight's video should be fairly quick. We're just going to go through an overview of the markets and the activity today and get set up for Tuesday. Let's get into tonight's video. Welcome everyone. In tonight's video, I'm just going to do a quick overview of what occurred today. In last night's video, I talked about seeing a rebound, and I keep warning you folks all the time, is that if I mention a number, you have to know the next day that that number will be hit. And that's exactly what we saw today. I mentioned a couple numbers around the 50-60 number, and then as high as 50.92 as a projected high for the week. And if you're watching the actions, what we action today, we did see trade all the way up to the RXT level on the S&P, which was 50.78, and I put a tweet out looking for a rejection around this level. Got a huge rejection, about almost 30 handles off of that high, and there's no way the market's just going to keep running up. And what today was, in my opinion, was an illustration of how short everybody actually was. And it was relentless short covering. It was almost panic buying at certain phases of the market. It just kept really grinding. It was one of those stampede days. The order book was fairly thin. There wasn't a lot of buyers and sellers on any price, so that's why we saw it was so easy to push up. Everybody was on the buy side, and they were very aggressive. It was definitely a lot of get me out orders that were coming in there. So really, it traded within the ranges I expected. I mentioned in last night's video and in the Substack that we got STX buy signals weekly, both on the S&P and the NASDAQ, and that was definitely showing today on how the market's traded. So let's talk a little bit about economics coming out tomorrow. We got new home sales coming out, expected to be 670,000. It's interesting with rates coming up. I've been noticing, especially around X, a lot of tweets talking about the inverted yield curve. I put that on in the Substack last night. And by the way, the Substack was a free version last night, so all you needed is a free subscription to get to that. I do at least one or two a week that are free. But so make sure you go to KendallReport.com/newsletter and at least subscribe. You can see what I was talking about. But I showed, possibly I'll use that to show you what the yield curve has done since everybody's starting to talk about the inversion again. It's actually been flattening out substantially over the last 3 months. So it's really a lot better position than it was. It's not signaling any kind of recession or anything like that, in spite of the sharp sell-off that we saw last week. So let's go ahead and, one thing that was pretty obvious today, I know I've been kind of beating on Tesla. Tomorrow we're going to go over stocks, but the markets were screaming hot, and Tesla was down and printed down into the 138 level, which was a fib target. So I'll go through that tomorrow night. But I'm telling you, Elon's out on Spaces telling everybody he thinks it's going to be the most. He sounds like Kathy Wood, and self-promoting this is going to be the most profitable, most largest company in the world 5 years from now. So he's been talking to Kathy too much. And I think what you're seeing, just real quick, I'll make this comment, what you're seeing from Tesla at the moment is that we're only they're panicked. Okay, they're lowering prices again. You're going to see earnings tomorrow after the close, so we'll be able to cover that when we come in live tomorrow. And they're advertising, even though they're advertising on X, they're advertising. They are absolutely panicked. They got recalls. It's a mess. I'll save most of it for tomorrow. But we're looking at, as we look at what the action happened today, we did print up the STX. We did see, after a day like this, we did get a turn up in the market grid across the board. The Russell was only up 0.24, NAS was up 0.99, S&P up 0.87, but we were up almost 1.5% at one stage on the S&P. So that rejection off of that STX level was really significant. I always think about, the high of the day was 5076.25. Somebody bought that price. Okay, they bought the high of the day. We used to say back in the old floor trading days, don't get your name into Wall Street. Somebody got their name into Wall Street today. And it'd be terrible if they were short and they actually bought back at the worst possible price just to watch the thing reverse and probably stuck their head in the sand. I'm sure it was very emotional. So let's go ahead and let's just go through the indexes here. Matter of fact, before I move on, I'll just talk. There's a couple questions here. Brad, EU is talking rate cuts. Yeah, who cares? I'm telling you, it's not the rate cuts that matter, especially in the U.S. here. Rate cuts mean nothing. It just there's no effect here right now. We're not in a recession. Why would you cut rates anyway? Maybe they will. Who knows? I don't think it has any impact on the markets from that standpoint. I think what we're really looking at is what I've talked about, and I'll bring up the yield curve chart here in a minute, so we can talk about that. So let's go ahead and let's go ahead and go through the indexes. So let's start with the S&P. Okay, so what I want to show you here is where we got to. We went right to that RTX number. I'll bring it up over on the side over here. You'll see it was 78. It was 78.67 was the actual number on the market grid, and the high was 76.25, and the rejection out there was pretty violent. Actually, we rejected all the way back to around 40.42 intraday, so that was pretty decent rejection from that level. Now you can see here the market grid turned up, and looks like what we'll probably get today is possibly there's no real news coming out. The new home sales, and that's pretty much about it, really. There's nothing material coming out. And what we're looking at is this downward slope 10-period moving average. I'll show you the PPMs are still very negative. We're minus 0.42 on PPM1. PPM2 is minus 0.23. So we're in a very significant downtrend. The rejection point, the next point we should see is anytime we trade near that 10-period moving average. So if we look at, that's a possibility today, we would have to, that 10-period moving average is right now at 51.01. It is dropping about 22 handles per day, so it's going to be 50.80. And if you recall from yesterday, I was talking about 50.92 is probably going to be a pretty decent high of this pattern. If I just brought up the weekly chart so we could see the market grid there, and you can see 50.91 is R2 on that level. A tick above that would be 51.37. And as I discussed last night, my expectation is we get an inside bar this week. So there's definitely going to be more of a bias to the upside. I've mentioned all of the earnings and all of that stuff that's coming out right now. And that is definitely all going to be biased to the upside. The only probably bad earnings that we're going to get is Tesla. Maybe they'll surprise everybody, but I doubt it. I mean, like I said, they're doing everything to pull out the stops to try to slow the bleeding, and it's basically got an artery cut. But the bottom line is on the weekly charts here, we should get an inside bar and then possibly make a higher high next week and then a rejection off of that level. Whether that ends up to be around that 10-period moving average, something like that, we'll be able to zero in on that pretty good. But overall, going back to the daily chart here, is what we're seeing is, let's see if I can fix this chart. There we go. Yeah, so we do see the PPMs forecasting that the market's going to continue to rise for the next several days. So I suspect we could get as high as the 21-period moving average here on the daily, which is 51.88. So look for some of those numbers, 51.30 plus. And I'm warning you, I just said those out loud. So let's go through, I'm going to get through this pretty quick tonight. We're 11 minutes in. I'm just going to run through, we'll do NASDAQ, and then we'll skip to the interest rates. Not much happened there. And then we'll hit, we'll go ahead and probably just bail out and do Bitcoin, and I'll come back and talk to you for a few minutes, maybe answer a few questions. So here's the NASDAQ daily. Did not quite get to the RTX level on that, but we did see market grid turn up today. We're probably looking at, on the S&P, probably an S1, R2. I think there's still going to be a bit of a bias to the upside as we come into tomorrow. I don't see much of a downside move. It looks like the PPMs are going to turn up on Wednesday again, and so we'll just see some recovery as we come into this. Okay, yeah, I'm just looking at some comments. So the sound is okay, right? I tried to change the noise gate, so let me know that that's okay. Yeah, no, I just, yeah. Anyway, so let's move on. Yeah, so this pattern is likely to just continue as is. There's really nothing here. We go to the weekly. We did get, here's our STX buy signal on the weekly, and we're likely to come into this pattern here that I was talking about, these wedges. I think we end up just trading a very broad range. Markets are in trouble for a little bit. It's going to take a fair amount of consolidation. I expect that the overall patterns that we see are just going to be corrective in nature. We may have some rally and then another retest of the lows that we made last week, maybe make lower lows, but there's nothing out there that looks like is going to be very exciting as we come into the end of this month and move into May. And initially everybody will probably be screaming sell in May and go away, and then this is what I've been talking about. Probably by the end of May, June, we should see a low setup, especially if we print down into -7 to 10% off of the highs as we come into that zone. Quickly going through the Treasuries. What we'll look at here is that we're just going to consolidate. This is what I was talking about. We hit above Fibonacci 1 target. We still have live targets here for a move up to the 478 level. That's still very possible, and maybe some of the numbers we get later in the week will cause that to happen. But I think overall, everything's going to start to consolidate here. On the equities, we'll consolidate around the bottoms that we made last week and see just a sideways choppy. And from the interest rates, we should chop around. So let me just see if I can do something here. I'm going to go on the other screen, see if I can bring this up for you. There was something that I put in last night, and I'll bring that up on screen for you here in just a minute. All right, I've got it here. So I want to show you while we're going through this is the Substack last night. 3,100 words. I got really carried away last night. So a couple things just to kind of tie together with, I'll come back to this. Let me go to the market, to the yield curve. So this is what the yield curve looks like right now. When the blue line is current, the red line is where we were at the end of the year. So you can see that the back end of the curve is flattening out. It's moving closer to this little shaded area that you see here. That's where I think we get very close, where everything stays together. I still think there's a possibility. I doubt if it happens in June, but we'll have to see what kind of numbers. We do get PCE numbers on Friday that we get down maybe a quarter point, so this comes down to 5, and we start to get to this flattening curve. I'll just draw this in very quickly here. For some reason, my tool's not in the bin where it's supposed to be. Anyway, what we should do is just come back up here where I think the short end of the curve can drop down. There's no reason for it to be as high as it is right now. And then this whole yield curve will just continue to flatten. Even if they drop rates on the front end of the curve. Yeah, bear with me one second here, folks. Everything's locked up again. Sorry, system locked up. I don't know why it's doing that. Let's try it again. Okay. Yeah, so this configuration here is really what I'm just going to see. This blue line is going to stay where it is, and the front end of the blue will start to drop down maybe to 5%. And I think ultimately that's probably where we end up staying for a while from a yield curve standpoint. Okay. Yeah, somebody's saying CL, please. Yeah, we can take a quick look at it. That's funny. All right, so let's go back to the 10-year here. We're looking at everything is just stabilized here. So we're going to be locked in 450, 475 is going to be the higher end. 478 is that fib target. So let's go ahead and, yeah, let's do crude oil here. Okay. So crude oil just continues to be along this flat line here. The momentum and the PPMs are still positive. And if we go here, you can see a much better view of this upward slope. So it flattens a little bit here, and we're likely to continue to see the crude oil come into probably up closer to $90, $95 as we go down the trail, which that'll be interesting for the election as well. So a lot of things are starting to look interesting. I don't think the Fed can control this, so we're likely to see some decent movement here. This is a weekly chart. If we come to daily, and you can see it's just a flat line. If you look here, it's like a EKG here. I don't see really anything coming. Let me just bring this so we can expand it a little bit. Whenever you see crossing moving averages like this is just trendless type market. It's telling you that you're going to be range bound, and that's been the case for a while. We did hit into some of these Fibonacci targets on a daily, but for the most part we're just seeing a sideways stabilization as we go forward. So nothing to be surprised with at all as we go come through this next period here. So I still think ultimately we probably see 90s, maybe higher on crude as we go down this trail a little bit. So we'll go to Bitcoin. I'll come back and answer a few questions as soon as I get done with this. Bitcoin's rebounding. I mentioned this in the Substack last night and when we covered it in yesterday's video, but we're coming right into resistance again. This is the daily chart. Let's go to weekly. There's a better view here. There's a little more way to move around here. We're right back to this 10-period moving average, and that's likely to be where we stay as far as that goes. We're looking at, from a market grid standpoint, 69,201, 71,445. These are numbers I mentioned in Substack. That'll put us back into some resistance. But basically, since we made the initial high in this pattern, which was over here at 73,794. We've been absolutely sideways, just consolidating. The halving event is over, so we don't have to hear any of that noise again. But if you look at the algos, they are starting to lose some momentum, and it does look like we have another week or two of slight positive upslope. I don't see market grid turning up much. We would have to take out this fib target 2 that's up here right now to actually move anything substantial. That's 71,830, and if we got above that, then there's also still a live Fibonacci at 77,544. But I think if we did print up in those levels, I would look for a rejection out of there. I think there's going to be a fair amount of sellers coming around in this market. All right, folks, I know that was pretty quick. We're at 23 minutes, so if you have any, I'm glad to know that Bill Gates is watching us. Yeah, so like I said, I think just generalizing what I said today is we're going to see a continued consolidation, possible rebounds in the equity markets. Treasuries are going to stabilize as well. For the most part, this is a big earnings week. We got a lot of the big dogs reporting this week. So expect to see some volatility. We've got Tesla after the close tomorrow. We'll be able to cover that. And I would also be bringing some of the stocks that you want me to cover from that standpoint. So we're going to end this really quick. I know that this is one of the quicker videos, but yeah, there's really not much to do tonight, so we'll save it all for tomorrow, and we'll go through a lot of stocks and really focus in on individual stocks tomorrow. So we'll see what happens tomorrow. I think we based on Tuesday, but I think we basically get some more consolidation. There's still a slight upward bid in the markets. Have a great day trading tomorrow. We'll see you folks then.